right, guys, this is Alex from the War Room doing your nightly video. So I thought today would be, since the markets are closed right now, I thought it'd be kind of cool to go over with you guys something I use a lot for day trading, right? So if any of you guys day trade at all, this is a cool little strategy or technique to use to really help you get in at the right time for entries and also know when to get out, okay? So here's what we're looking at here, right? Here we have Starbucks on a 5-minute chart, right? And what we see is that we have a couple lines here, right? So the purple lines are the VWAP, right? And then we have a green line and we have a red line, right? So the green line is the 9 exponential moving average, and the red line is the 20 moving average, okay? So here's something useful that I've learned that works like most of the time, okay? Definitely want to look out for. So you can actually use these two moving averages here to predict like when there's going to be movement in the stock. And it also presents good entry and good exit, okay, price points as well. Okay, so here's an example. Now, one thing you want to remember, okay, and this is like really important, is that these kind of moving average crosses only work when you're in a trend. Okay, they do not work in chop like this. See in here, they're like zigzagging and crossing, right? This doesn't mean anything. Don't trust these signals. Okay, so I actually have arrows on here that tell me when they cross, right? So when there's a green arrow, that means the 9 is crossing the 20, that's bullish. When there's a red arrow, you can set this up in Think or Swim, by the way. It means that the green is crossing down, right? Crossing down, that's bearish on the 20. And here the green crosses up, right, on the 20, and that's bullish. So if you look at here, right, this is Starbucks this morning, right? They started off, it was a nice, little cross right here. But if you notice though, this is still chop, like this is like sideways, right? There's no real verification yet, okay? And we're just looking at the moving averages, right? Then we have chop, 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 chop. Then we have another cross here, chop, chop, chop. And then like right here, we break out of this area. So one thing you can do is you can kind of draw some lines, right? Which could serve as like support and resistance levels. So right now, Starbucks is within a range, okay? And drawing lines and creating a rectangle are very useful. Just look, right? Starbucks is in this range. Bam, 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 bam. So you do not want to trade this range, okay? Do not trade. Just sit on your hands and wait. You're waiting for a breakout. Okay, all of a sudden then here, we have consolidation, we have boom, then right there, we break out, okay? Now that the green is on top of the red, right, that's called a golden cross, by the way, when we cross up and we get some volume, and we're now broken out of the rectangle. If you look down at the squeeze indicator, right, we have light blue bars and a squeeze happening. That's very bullish at the same time. RSI is rising. Stock RSI is rising. Green's on top of the DMI, right? They're all saying the same thing. Like this is bullish, and it's getting closer and closer, potentially to fire the squeeze. So this is where you would get in, right? Not on the breakout bar, right? But always wait for the confirmation bar, which is this one. So this one opens up, and you see it still above that range. Well, this is where I would get in with calls, right? And I would wait. Then it goes bam, 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 right? The squeeze fires right here on this price. It runs up all the way. And then right about here, you see that on the squeeze, it starts forming like dark blue bars. RSI starts going down. We're kind of losing momentum. So here's a good way to do a natural stop, right? We got in right about here, okay? And for a really bullish stock, once you see it break that same 9 moving average, that's where you now want to close the trade. So this is a 5-minute bar, so this thing is moving pretty quickly. So once you see a break, let's say in a minute or two, and you're seeing these, same bars here and RSI going down, this is where you get out. So get in right about here. That's what? The price is about 115, about 116. And get out about, like right here, right? So like 116, 116.1, right? So it's about like an 11-cent difference. Doesn't look like it's too much, but you definitely want to be safe, right? And if you're doing like options, or you're just kind of essentially scalping. See, the thing about options is that 10 cents could be a lot with options, right? 10 cents, if you have at the money calls, could be like 10, 15, 20, 30, 40 bucks, 10 cents. So this is really like a quick, in and out trade, not that long. And this could be a great way to kind of manage it, right? You wait for the breakout, you have the golden cross, you have the 9 on top of the 20 in the squeeze, momentum rising. You ride it up all the way. And once you sense weakness or breaks a 9 EMA, you close this position down like immediately and get out. So that's really a cool trick. So let me look at some other stocks here. Let's look at Amazon. Okay, I want to show you other examples, right? Because that one didn't really have that big of a move because it's a smaller price stock. Let's look at a bigger one. We can really make some good money here, right? So Amazon opened up, right, consolidating, and then it broke through both moving averages right here. We had some consolidation, and then right there on that candle, it broke this area right here, and this is where you get in, right? When it broke through the bottom of this area right here. And then you can write it down here, and then once you see a reversal pattern, right, you can get out. But once again, though, the green is below the red, right down here. So now we go up. Now the green crosses the red here. We have a couple positive bars. You can see there's a slingshot squeeze here. So maybe you ride this up a little bit, then it goes down. So as you see, right, nothing is ever perfect in trading, right? But you want to look at something like this for like big moves, right? Because right here, right, let's say this is consolidating. So you kind of be hanging out right here. Maybe you got in, you got stopped out. Okay, whatever. You lost a few dollars, no big deal. Then you see this death cross, which is a 20 crossing. You see the 9 crossing down on the 20, right? Not on this one, but maybe as this one opens up to confirm, you would get in. And then if you were to use the 9 as like your resistance, right, you may then potentially follow this thing down here. Okay, it comes back up. You have a little bounce. You have 1 bar outside, but no confirmation. And then keep riding this thing down. I mean, think about it. This thing closed at 34.96. You could have rode this all the way down to 34.85. That's a $10 move, which on, at the money calls, at the money puts in this case, will be a really nice, huge gain here, right? And look, it tries bouncing off the 9 again, doesn't close above it, keep riding it down even more. You would have got down to 34.87 at the end of it. Okay, so moving averages are great because you could use them for support and resistance on trends. And also, when you have like a death cross here, or you have a, golden cross here, right? It really, especially when you have it in coinciding with a squeeze or the rising RSI or declining RSI, it gives you a great idea and measure of what's happening real time with that stock and where the price is going. Okay, and you can actually use these too for the 15-minute time frame as well, right? Right here is where it dropped below, consolidates, boom, drops out of the rectangle. You get in about here, boom, write it down to the bottom. That's your resistance or your stop. And the squeeze is firing off to the put side. So as you see, there's a lot of examples here of this kind of strategy working. Obviously, don't ever use like one strategy in and of itself, just looking at moving averages. You definitely want to incorporate, the squeeze, the RSI as well. And also, just anything that really confirms direction is what you're looking at. But definitely a cool little scalping trick you guys and gals could use to make some money. Always remember your stops, okay? Because direction could turn on a dime, right? Like for sure. And remember, only ever do this. The moving average cross is called the moving average cross, or a crossover of the moving averages. Only ever accept those signals when it's trending. Okay, never in a consolidation period. Okay, it's really, really important, or you will lose all your money from theta decay right here. Okay. All right, guys and gals, you guys have a great night. See you next time. Bye-bye.